Today is Thursday, the 15th of January. I ended up taking 2 trades today. The first trade I took was a loss. The second trade I took was a win. Currently, I'm up $1,400 on the day across each 5 of my combines. Don't know what that total's out to, but it's somewhat near like 7K overall. But yeah, I ended up taking 2 trades, both shorts. And yeah, let's get into today. So just to start it off, I have not been doing anything today. I woke up at 11 a.m. because I went to sleep at 3 a.m. I got up, started watching Batman. I've been watching Batman for the last like 3 hours. I ended up checking my phone for the time, and it happened to be 2:19 p.m. in UK time, which is the equivalent to 9:19 in New York time. I had 11 minutes to prepare for market open, to set my camera up, to set my OBS up, to set my screen up, to get all of my analysis done. And funnily enough, today had no clear bias. No clear bias whatsoever because of how price action was forming. Now, price was extremely odd today. And if I was on an Express account, honestly, I would have just taken the day off, because when you look at a chart like this, it is the complete opposite of what you want to see. So what did I want to see in the markets today? If we go on the daily time frame, we already understand that price had a massive drop to the downside yesterday, and it ended up breaking daily structure. Now, once price breaks daily structure and you have somewhat conviction aligning to price continuing, so in this ideal, we've got an S&T with all-time highs holding, we've got an S&T with previous month's high holding, we've swept out previous week's high, we've clearly found a clear level of resistance. We have ended up just absolutely destroying any sense of buy-side liquidity. We have inversed high time frame for value gaps. We have broken structure on all time frames. You would expect an easy continuation to the downside. An easy continuation. Now, as we all know, we're not here to predict the market, we're here to react to it. So on the reaction side of the market, you've got 2 extremes. You've got your targets and you've got your conviction. Targets in a day like this is your liquidity. So where do you think price is going to go? What reasoning does price have to draw towards your desired side that you want to target? In this ideal, we have got an opening gap range. Bearish price action fills this imbalance. We've got London low, Asia low, and we've got 2 4-hour for value gaps. So based off of that, you would naturally want to see price kind of be drawn towards sell side liquidity, because we have got all the reason to move and take it all. So now that we have got the targets out of the way, we're gonna see what the conviction is that aligns with it. So conviction wise, we have got our S&T with all-time highs holding, and this might be a bit extreme. This might be a bit frantic with me dragging it out of nowhere, but honestly, for the past few weeks, we've practically been in a chop. No joke. There's been moves all over the place. We've had deep retracements to deep legs up, to more deep retracements, to more deep legs up, to more chopping, to more deep legs, to more deep legs down, to more deep legs up, and it's just been all over the place. So, considering all of this into the chart, conviction-wise, let's just finish off that point. We have swept out previous day high. We have got no SMT holding there, but we have not broken 4-hour structure to the upside. We may have inversed this for value gap and that for value gap, but honestly, at this point, you want to see more structure build so that you can get a more clear idea of where price is expected to move. So, aligning everything into the chart, do I want buys? No, because we're in an extreme premium of the market. We're in an extreme premium. We've not retraced into midpoint of this imbalance. We've not taken out any draws on liquidity, so anything is on the table realistically. Now, since we have had a bullish Asia and a bullish London, you might expect us to have a bullish continuation to the upside, but as we clarified already, we have got no high time frame break of structures. So, I'm aligned to wanting to be bearish. I just need my piece of the pie. I understand that price is going to be very volatile in this session. I understand that price is going to be very inconsistent and very spiteful of how it delivers. I just need my piece of the pie though, people. That is all that you need. So marking out such a clear draw on liquidity, let's just mark out this 30-minute session low. 30-minute for value gap. Marking out the 30-minute for value gap, that is a fucking beautiful trade. What do we have upon market open? We have got a 1-minute break of structure to the downside. You could probably say there's one up there, but let's just count it as this one. We got a 1-minute change in structure, change in state delivery. You could enter off of market open if you really want. Stop is 28.7 points. TP is somewhere here or there, or these two equal lows, whatever you want. That is a clear trade. So considering price had an 80% chance of filling this 30-minute for value gap, I faded that setup. I faded that setup because I was very unconfident with it. No, I wasn't unconfident with it, but I wasn't willing to like push a trade. I wasn't willing to force a trade as soon as market opened. So getting to the point, markets end up sweeping out these lows, creating an internal S&T with ES and YM. At this point, ES and YM had already made legs, or YM was sprinting to the upside and ES was just chopping around this area here. So here is where I made a small mistake, I'd say, but at the end of the day, my bias was clear. I had conviction behind what I was thinking. So I end up going down to the 30-second time frame. Now, as you can see, if we have a break of structure to the upside, after sweeping out internal liquidity, holding an SMT in a 30-minute for value gap, you can expect buyers to the upside. Now, don't ask me why I sold. It was kind of out of fear. I'm going to admit that. Kind of out of conviction. I had a tight stop loss at that high. Tight-ish. Take profit was at this low, and yeah, price ended up coming down to the downside. It didn't quite inverse this fair value gap. I was like, cool, we can expect a even more bearish price action because yeah, we swept out internal highs, sorry. We have broken structure on the 5-minute chart here, inverse 5-minute fair value gap here, and I was like, cool. Unfortunately, that trade did not play out. So reevaluating what I am doing on the markets, it got in my head that we'd swept out this high now. After we'd swept out this internal high, or 9:30 a.m. high, we end up putting in an S&T with ES, and at this point, ES was still dancing around in that range. It was still in that range. It hadn't swept out this high, hadn't even swept out the 30-minute for value gap. So I just aligned the clearest bias I could find. The clearest bias I could find was that we had a 5-minute for value gap here. 5-minute for value gap. Now, unfortunately, we have to look at all of this past price action because I hesitated to make this video. I exited that trade about over an hour ago, but hey ho, I mean, I'm not really going to complain. Back to the point. We got a 5-minute for value gap here, holding. We seem to be respecting this opening gap range high. So aligning my external draws on liquidity being these two relative equal lows with some more internal low resistance liquidity being these two relative equal lows. I waited for price to have I waited for price to retrace into this 30-second for value gap. From here, we tapped back into the opening gap range level where if you want to be bearish, you want to see this thing hold. So after we respected it once and pushed to the downside and then came back up, rebalancing to CE of this wick and respecting it, I ended up going in short like here, stop loss at this high, targeting these relative equal lows, and at halfway through this candle, stop loss to break even, risk-free trade. I've got nothing to worry about. I've got nothing to lose on this trade anymore. Price ended up just sweeping out in, I'm running out of breath. Price ended up sweeping it out within 2 1-minute candles. So, man, it was a beautiful day, beautiful trade. Could have avoided the first one, but you can't expect your game to be perfect. You got to make these mistakes, and I'm not saying that trying to buy an excuse out of myself, but it was a good day. I had a clear bias going into the. I'm being hypocritical. I had built a bias that had very high conviction in this second trade that I took, and I can say that's why it worked out. It was a good trade. I was confident with it, and I let price do its thing, and that's why I've ended the day $175 away from passing the accounts. So, what does tomorrow look like for me? Tomorrow looks like taking it slow. I only need to risk $90. I need to hit a 1 to 2 risk to reward, and that'll pass me the account. Now, am I gonna launch into a 2-mini position where I'm risking $500 to make $200? No, we're gonna use our past mistakes, our past trials to help me master my edge, to help me get these accounts passed so that I can end in a better position that I started the weekend. So I hope this was helpful for you. I hope you learned something from this. If you did, comment down below what helped you the best and what you're going to implement next into your trading. So thank you for watching, and I will see you tomorrow.